Why is everybody talking about Grab suddenly? Since Sunday, every other post on X has been about Grab. Grab. This is the next big thing, the next 10x, whatever. So let me explain to you. This is going to be a crash course on Grab Holdings. We did talk about the company before on the channel. I think in November was the first time I actually did a specific video about that company. If you missed that one, it's going to be in the top right corner. If not, this one is just going to be a crash course. What they do, where are they from, how they operate, when did they go public, how they went public, etc., etc. They will report earnings Wednesday after hours. They will report earnings, so of course we're going to cover that. Right now, at the time of making this video, the stock is up 9%. It was up 15% at one point. If you go on one of your favorite financial websites, you're probably going to see in the search bar that this ticker is trending. So I guess retail does have some real power these days. So let's talk about Grab. If you're interested in all of that, hit all the buttons. We've just reached 80,000 subscribers. 80,000 subscribers. So thank you very much for all of your support. I mean, the road to 100K is right there. Right there, I can see it. So I appreciate all the support. You can unsubscribe after we hit 100,000. It's free anyway, so you do whatever you want. And if you want to support me even further, you can check out all the links down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So what is Grab and what does Grab offer? Well, Grab wants to be a super app. You've been hearing about the word super app for many, many years now. In China, they have WeChat. So in Southeast Asia, which is where Grab is operating, they want to be that super app where you basically get to do everything that you need to do on your day-to-day basis. So what do they offer? Ride hailing, similar to Uber, offering services like Grab Car, Grab Bike, Grab Taxi, and more. They offer food and grocery deliveries through services like Grab Food and Grab Mart, digital payments, financial services. Of course, everyone offers that. If you want to have that super app, you have to go into financial services. Still a small part of the overall business, but growing quite quickly. They have courier services, so Grab Express for package delivery, and then enterprise solutions as well for businesses, including logistics and ad solutions. Now, Grab was founded back in 2012 as My Taxi by Anthony Tan and Tan Hoi Ling in Malaysia, initially focusing on taxi booking. Grab operates across 8 Southeast Asian countries: Singapore, Malaysia, Indonesia, Vietnam, Thailand, Philippines, Cambodia, and Myanmar, which I'm going to touch a little bit on the GDP growth potential of that later in this video, or you can just go watch the other video. I basically talk about the economic participation, GDP growth, and all of that in another video. Touching back on Grab, they rebranded to Grab Taxi in 2014, then just Grab in 2016 to reflect its broader service offerings. By the way, 10 years ago when I was in Thailand, I was already using Grab, so I'm an early adopter, you might say. They became Southeast Asia's first decacorn, not unicorn, decacorn, a company valued at over $10 billion. They merged with Uber's Southeast Asian operations in 2018, taking over Uber's assets in the region. So me personally, I'm a holder of Uber shares, so I'm indirectly an owner of Grab as well. I think Uber has around 12.5% of Grab. I currently have no shares in Grab, so full disclaimer here. And last thing here, Grab went public in the United States via a SPAC merger with Altimeter Growth Corp in 2021, listing on NASDAQ. Now, you might say, oh, this is another SPAC company, must be red flags. I disagree. I know a lot of SPACs have a lot of red flags, but there are some that are quite good. Now remember the companies that Grab operates in. So here we have GDP in billions, the growth, or the expected growth in the coming years up until 2029 from Brunei, Cambodia, Indonesia, Laos, Malaysia, Myanmar, Philippines, Singapore, Thailand, and Vietnam. So the majority of the countries that Grab operates in. And as you can see, we can go from 2024, of course we're already in 2025, but we're just at the start. So let's use the whole of 2024. It was closer to 4 trillion. And it's expected to grow up until 2029 to reach around $5.5 trillion in GDP. So there's definitely potential in that region. Also, if we look at the ratios of working age to total population, we can see that in the next 10 to 20 years or so, it's going to peak. The working age population ratio is going to peak in most of those countries, and in some of those countries, it has already peaked. Now, of course, when you look at metrics like average revenue per user, it will not be as big as those that operate in Europe or North America. That's normal, but when you have a super app, you can cross-sell a couple of services. It costs you less at the end of the day. They use it more and more because if they use it on a daily basis, they basically transact more with your service. They use your app more and more, and you're going to make more money that way. Plus, I mean, the population of all of those countries together, it's quite large, close to 700 million to be more accurate. Now, looking back at Q3, so basically what they reported 3 months ago, revenue increased 17% year over year or 20% on a constant currency basis. On-demand GMV increased 15% year over year. Group adjusted EBITDA was $90 million. Profit for the period was $15 million. And the trailing 12 months adjusted free cash flow was $76 million. And that's up $348 million year over year. So they're turning a profit. Now, I'm also making this video to make sure that you're all having the same vision, right? You're not thinking that, oh, this is a hyper growth company growing 100%, 50%. No, it's not going to grow as quickly as the Palantirs or the stock like Palantir or Robinhood or whatnot. No, this is a business that is growing quite steadily. And as you can see, the expected growth for free cash flow for fiscal 2025 is closer to 25%. But then in fiscal 2026, currently, the expectations are for it to grow around 10.8% year over year free cash flow. Like I said before, they have 3 segments inside their business: financial, mobility, and delivery. Delivery, of course, the largest segment right now, and that has grown since the March quarter of 2023 at a compound annual growth rate of 18.6%. Then we've got mobility growing a little bit faster than that, closer to 25% CAGR. And then the financial services one, which is the smallest one, but growing the fastest, has grown to a compound annual growth rate of 46.6%. Now, from an adjusted EBITDA perspective, the financial services is still negative. Of course, we've seen that with plenty of other companies as well. As you start a new product, you want to grow it extremely quickly. Profitability is not the first thing that you're going to think about, but eventually, of course, you would like this to turn a profit. With regard to delivery, we can see that that had turned a profit back in the June quarter of 2023 and now growing steadily. With regards to mobility, that continues to grow quite nicely. Another important metric to look at is, of course, the total monthly transacting users. Now, last quarter, we reached close to 42 million, and that has grown 16.4% year over year, which is a small deceleration from the quarter before that. Now, as you can see, there was a couple of quarters where you might have said, maybe the growth story is completely broken here, but then we've seen a solid reacceleration in growth starting, a year ago, December quarter of 2023, and then it just went up and up and up. Of course, last quarter, a small dip here, 16.4% year over year growth. Let's see what they will report tomorrow. Hopefully, maybe a small reacceleration. If not, if we continue to see a deceleration, some questions need to be asked for sure. So again, your expectations should not be that, Grab today is a $20 billion company. Maybe it should be $100 billion in a year from now, a 5x. No, I don't think that's going to happen. I think they're going to grow steadily, but your expectations should not be that, I'm buying this because there is a lot of hype. I do think that right now, if you go on social media and look at the chatter, I do think that it's overhyped. I don't know why people think that this is suddenly the next 100x idea. No, this is just another good company that has flown under the radar, and it so happens to, trade at just $5 and 10, 20 cents or so. By the way, the price of the share, the $5 and something, does not mean that the stock is cheap or expensive. Yeah, a $5 stock can be a company just like Grab that is worth $20 billion or so. A $100 stock can be a company that's worth $10 billion or $5 billion. The price you're paying per share does not mean that it's cheap or expensive. I hope that is clear. Moving on to the last thing here, and that's the outlook for 2024. So revenue for 2024, they expected to grow between 17 to 18% year over year, which is better than what they previously told us, which was growth between 14 to 17%. As for the group adjusted EBITDA, they expected now between $308 and $313 million. Previously, they expected it to come between $250 and $270 million. And then adjusted free cash flow for the year, positive for the full year, and that remained unchanged. If you want to know specifically what the numbers are, or the expected numbers are for the upcoming quarter, so revenue is expected to come in at $756.6 million. That's a 5.6% quarter over quarter growth. EBITDA growing closer to 8.8% to just under $100 million. EBIT here basically closer to break even. EPS on a GAAP basis, break even. On a non-GAAP, 1 cent. And so right now what we're seeing is that pre-market we're going to try and go above the previous local high that happened back here in November of 2024. Stock was overbought back then as well. It went back down all the way to around $4.50, maybe a little bit lower than that. Now we've seen in the last couple of weeks a nice solid rebound above the 50 and the 20-day moving average. The 200-day one just still sits closer to $4.14. Now, we're probably going to be overbought yet again, but if there is momentum, if there are more buyers, then I do think that we can go a little bit higher. But all in all, don't put your expectations super high. There's going to be earnings tomorrow. We're going to get way more information. Don't think that this thing will be your next 3 or 5x just like that. And so all in all, that's about it. If you like these types of videos, like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.